All right, future insurance pros, your exam is right around the corner, and underwriting is a topic you absolutely have to know inside and out. In the next few minutes, we're going to do a laser-focused cram session on the key concepts you are definitely going to see on test day. No fluff, just what you need to know. Let's dive right in. So here's our game plan. First, we'll hit the purpose of underwriting, the big why behind it all. Then we'll walk through the actual process, see how risks get classified, talk about your role as the agent, and wrap up with exactly when coverage kicks in. By the end of this, you're going to feel solid on this whole section. Okay, let's jump in. To really nail the questions on your exam, you got to understand the fundamental goal. Think about underwriting as the insurance company's own private investigation. So what are they investigating, and more importantly, why do they even bother?
So, what exactly is underwriting? Well, at its heart, it's all about risk selection. The underwriter has two main jobs. Job number one, decide if the company should even insure this person. And job number two, if the answer is yes, figure out the right price, the premium, for taking on that risk. It's all about making a smart, profitable decision.
In this right here, this is the number one reason underwriting exists. You absolutely have to know this term for the exam, adverse selection. It's just the basic idea that the people who need insurance the most, the highest risks, are the ones who are going to be banging down the door to buy it. The whole point of underwriting is to protect the company from this, making sure they don't end up with a portfolio full of only high-risk clients.
Okay, so if the goal is to stop adverse selection, how do they actually pull it off? Well, this is where the real detective work begins. The underwriting process is all about gathering clues from a bunch of different places to build a full, accurate picture of an applicant's risk.
Take a look here. This is basically the underwriter's toolkit. The application is always ground zero, but as you can see, they're also going to pull medical records, check in with the MIB, and even look at things like inspection and credit reports to get a full picture of the applicant's lifestyle and habits. Now, the application itself is their number one source of info. And you got to know it's broken into three parts. Part one is just the basics. Part two is the deep dive into their health history. But pay close attention to part three, the agent's report. This is where you, the agent, give your personal observations. It's a really crucial piece of the puzzle. Now, the MIB is pretty interesting. You can think of it like a private, shared database just for insurance companies. It helps underwriters catch it if an applicant, say, forgets to mention a major health issue they already told another company about. It's a huge tool for preventing fraud. But it's not all about medical stuff, right? That's where inspection and credit reports come into play. They give the underwriter clues about an applicant's lifestyle, their character, and how stable their finances are, which all paint a bigger picture of their overall risk. And here is a rule you absolutely need to burn into your memory. Under the Fair Credit Reporting Act, or FCRA, an insurer can't just secretly pull your credit report. They must tell the applicant they're going to do it, and they have to do it in writing. Remember that phrase, notified in writing. That's a classic test question. So after the underwriter has gathered all the clues and done their investigation, it's time to deliver the final verdict. They're going to assign the applicant to one of four risk categories. This decision is what determines if they get a policy, and if so, how much it's going to cost. This table breaks it all down for you. At the top, you have preferred risks. These are the super healthy people who get the best prices. Standard is for your average person with average risk. Substandard means higher risk, so they're going to pay a higher premium. We call that being rated up. And finally, declined means the risk is just too high and the company won't offer a policy at all. Okay, let's shift gears and talk about your role in all this. As an agent, you're not just selling policies. You are the field underwriter. You're basically the company's eyes and ears on the ground, and you play a huge part in that first look at the risk. So, what's on your to-do list as a field underwriter? You're responsible for making sure that application is filled out completely and correctly. You collect that first premium check, send everything off to the home office, and later on, you're the one who delivers the policy. You're the first line of defense against mistakes and adverse selection. Now listen up, because this is another critical exam point. If you spot a mistake on the application, you can't just fix it yourself later. You absolutely must correct it with the applicant right there and then have them initial the change. An agent changing an application on their own is a huge no-no. All right, our final section, and we're going to tackle a question that trips a lot of people up. When does the insurance coverage actually start? It's not always as simple as the day the application gets signed, and you definitely need to know the specific rules for your test.
You need to pay close attention here, because this is a classic exam question. Look at the left, a conditional receipt. This means coverage can start as early as the date of the app or the medical exam, whichever is later, but only if the applicant is ultimately approved as applied for. That word conditional is key. Now on the right, you have a binding receipt. This provides temporary coverage right away, even before the final approval. You don't see them much in life insurance, but you need to know the difference.
So let's put it all together. For a policy to be fully in force, these three things you see here generally have to happen. The company has to issue the policy, that first premium check has to be cashed, and if the premium wasn't paid up front, the new insured has to sign a statement of continued good health. And that statement of continued good health, it's pretty much what it sounds like. It's a quick form the applicant signs at delivery that just says, yep, my health is still the same as it was when I applied. It's the insurer's way of protecting themselves from any last-minute changes to the risk. Okay, let's wrap this all up. Let's look at that final review question. What is underwriting's primary defense against adverse selection? The answer is the entire process we just covered. It's the careful, methodical gathering and checking of information to classify risk accurately. That's how insurers protect themselves. Remember that, and you're going to be in great shape for the exam. You've got this, now go ace it.